This is the daily fiscal pulse for the 22nd of April, 2026. We're working with Wednesday's settled data here, not live numbers. Let's start with what's happening in the wider economy. The Middle East and Iran tensions are dominating the conversation right now. You're seeing stories about Brent crude climbing past $105 on Strait of Hormuz concerns. Israel signaling potential military action. That narrative is moving prices across the board. Of course, headlines move markets, but what really matters is where the money is flowing. The net fiscal transfer for the session came in at $22.5 billion. In isolation, that looks reasonable. What's more telling is the underlying deceleration. The 5-day average has dropped to roughly half of recent levels. Household transfers are the main engine, delivering $32.2 billion. The equity picture shows something slightly different. ES futures settled at 7,170, staying above the 20-day moving average sitting at 6,813. That 20-day range stretches about 826 points wide. Prices are managing to hold steady even as fiscal support is ebbing. Pull back and look at the longer view, and the deceleration becomes obvious. Government spending over the past 5 days is averaging $29.7 billion daily. Stretch that to 20 days and it drops to $12.3 billion average. That's a clear slowdown. Less cash flowing through the system means less money reaching households and markets overall. Financial conditions are getting tighter as a direct result. Year over year, the picture is the same. Fiscal spending from the start of the year stands at $724.3 billion, roughly 13% behind the same stretch 12 months ago. That kind of gap in fiscal support has real implications for how much liquidity is available. For those looking for reasons to stay bullish, the fiscal backdrop here isn't exactly encouraging. Our financial conditions gauge is at -63, but history gives us some perspective. We've seen setups like this plenty of times before, and even when liquidity dries up, the S&P 500 has managed to post around plus 1.1% returns over the following month on average. Liquidity and stock prices don't always move in lockstep. Here's the key takeaway. With fiscal flows sitting below year-ago levels, there's less of a safety net underneath. Good news can still push markets higher, but if something bad happens, like an escalation in Iran or Middle East tensions, the market can fall faster since there's simply less liquidity there to cushion the move. Watch for some important dates ahead. Month-end settlement on the 30th of April could reshuffle where flows land in the short term. The 15th of April individual income tax deadline marks the single biggest reserve drawdown day of the entire year. Fiscal headwinds are clearly visible in the data right now. That said, the rate of tightening might be stabilizing. The next meaningful shift probably hinges on how these upcoming settlement dates play out. That's our focus.